And we are live. Sorry, we're a little bit behind schedule. We had to change up a couple of things. Thank you guys for joining us tonight. We are talking about some of the cracks that I'm starting to see in the housing market bubble a little bit. Not really, anything too terribly alarming, but there are some things that you need to be paying attention to. And I have a special guest. We're going to add him to the stream. We've got Mike Patel. So, Mike, tell everyone where you're from, and I know we got a groovy background for everybody to
Okay.
see.
Well, first of all, thank you, Rebecca, for having me as a guest on your live stream. I appreciate it. I am from Orange County, California, in the city of Anaheim Hills, and I'm with First Team Real Estate and been in business for over 25 years.
Wow, so you have
And
a lot
still
of
going on.
experience.
Yes.
Yeah. I can say you've probably been you were during the '08 crash, so you have that experience under your belt. What happened then?
Absolutely. Yep. That taught us a lot. And if we can get through that, and which we did, nothing else is going to stop us. So that was
All
a big
right.
one. Yeah.
That's awesome. So when we get to that section and we're kind of talking about some predictions and stuff, you can kind of give us your experience through the '08 crisis. I don't know, crisis or crisis works.
Right.
But we're going to go ahead and start with an article. I'm going to show my screen real quick. And the first thing on our docket is we're going to actually talk a little bit about property taxes. So property taxes on a single family home or homes are up 7% across the United States in 2023. That amounts to $363 billion. And this is kind of where taxes are up the most. You can see the areas in dark blue. It looks like we have some parts of New York, this little section here of New Mexico. Over here, is that Chicago? Can you tell, Mike? I can't even tell what that section
It
is.
looks like somewhere near Georgia or somewhere up. Yeah, somewhere down there.
Right next
Hard
to Iowa.
to
Is that
see, but
Indiana? Maybe. I think that's Indiana. It's hard to tell
yeah,
with the state
yeah.
lines. So you can tell like it's kind of set up by county. It's kind of how they have it set up is what it looks like to me. But it's gone up, this was just 2023. It went up 3% in some of these bluer areas, and then a little bit more or a little bit less on the lesser end in the red, but still going up, which does not give relief for anyone who's trying to afford their monthly mortgage and their taxes keep going up because their values keep going up. So we've got, it says released in 2023 property tax analysis for 89.4 million U.S. single family homes, which shows that 363.3 billion in property taxes were levied on single family homes in 2023. That probably those are homeowners. Well, I guess investors as well are paying property taxes, up 6.9% from 2022. So the property values were up a lot higher in 2022, which we can attest to. The increase was almost double the 3% growth rate in 2022 and the largest in the past 5 years. The report also shows the average tax on single family homes in the US increased 4.1% in 2022 to $4,062 after going up 3% the previous year. So I guess the biggest takeaway from Adam.com. Oh, you can actually zoom in on this. Look at that. I don't want to go in that much detail. Whoa. I'm not an expert at this map, and it's not allowing me to go left or right. Okay.
Yeah.
All right. Let's see. So what's your takeaway from, if property values are going up, we've seen values go up. I would say the biggest, increase probably was that 2020 to 2021. Taxes are paid in the rears, so not in advance. What would be kind of your take on what's really happening as far as property taxes go? And do you think that people are going to eventually see any relief from that?
I think there's two ways to look at it. I mean, the half glass full, half glass empty. So one way to look at it is, yes, property taxes overall has gone up, and they go up, at least in Orange County, they go up on average of 2% per year. But the one way I look at it, I bought my house 25 years ago, and
Okay.
my value of my home is up here, and the
Mhm.
property tax I'm paying is based on this assessment.
Okay.
So yes, it did go up 2%, but it's not that much if you compare it to the equity that I've gained. My
Okay.
house was worth this much 4 years ago. Now it's worth that much. So
Right.
my property went up this much tax, but my value went up this. So basically, yes, out-of-pocket expense is very high. I'm paying, like this, your report showed, you showed this average home pays about 4,000 a year more.
Yep.
But an average equity in a home has risen about 6-7% per year. So in
Right.
one way, you're paying property tax more, which hopefully you get a tax deduction on. But in the long term, your
Mhm.
value, I just read a report a few days ago, since 2021, property values have gone up anywhere from 30 to 50%, depending on where you are.
Yes.
So I have a lot of equity.
Yes.
So yes, I paid more property tax. Yes, that's not good. But on the other
Mhm.
hand, my home value have skyrocketed. So I'm a happy camper if you look at it that way.
So, and that differs from states like Texas. And that is just, you bring up a really good point, because in California, you're capped at a certain amount per year, correct?
Yes, it's usually, yeah, it's about 2 to 3% max, at least in
Okay.
in Orange County. The county, assessment is by county.
Oh, yes, correct.
Yeah,
So here in Texas, it's capped at 10%
right,
year over year.
right.
And we pay quite a bit more in property taxes because we don't have a state income tax it's trying to kind of balance that out a little bit. So I can see some really stark differences, especially here in Texas and maybe some of those other states that have 2 and 3%, what we're paying in property taxes. If you're not protesting your property taxes every year and really watching that, that's where it can kind of, the tax office can kind of get sneaky and try to go higher than 10%. Have you been seeing some of that too, where the tax office will try to get, more than 2 or 3% of your tax money than what's really due?
I haven't noticed that much because ours is very streamlined and it doesn't jump. So I
Gotcha.
haven't seen that. And I know back in the 2000, I remember back then, a lot of people had called me, my clients or homeowners call and say, hey, I want to dispute this property tax. Nobody
Yeah.
has called me in the last 5 years for a property dispute, which is good
Mhm.
news because they're happy with the increase.
Yep.
So like I said, the equity is higher. Our property tax rate is much lower than Texas and other states, but
Yes.
our property tax is 20-30% federal and tax combined, state and federal combined. So,
Yeah, because
California may be in a
easily,
bad shape. Yeah.
yeah, easily here, you're looking at, even though the values of the homes are lower, you're going to be looking at paying close to, I would say, 10 to 13 grand a year in taxes
Mhm.
here, just kind of to give people an idea of what they can expect. If you're purchasing like 500,000 up, that's about what you can expect in your property taxes. Now,
Right.
I will say your homestead exemption does help. Or if
Uh-huh.
you're a veteran or a disabled veteran, especially if you have 100% disability, you're not paying any in, property taxes at all, which is
Right.
probably, is it the same for California as well?
I'm not sure of the veterans if there's exemptions or not. I haven't heard about that. I have sold
Okay.
homes to VAs, but I'm not sure. I think it's due to everybody. But if
Okay.
there's exemptions, I'm not quite sure on that.
Gotcha. Yeah, because they're allowed. So if they have 100% disability, based off of their what the VA is saying, but their letter, I can't remember exactly the name of the letter, but
Yeah.
if they have 100% disability, they just show that to the tax office and they're able to not pay any taxes at all.
Right.
And then if they have a certain percentage, they get a percentage discount off their property taxes too.
Right.
So
Yeah.
I think that's also another reason why veterans have a tendency to retire more in Texas, just
Hmm.
because of all of
Okay.
the tax benefits
Right.
um, for them here versus some other areas.
Right. Okay.
So
Yeah.
property taxes are on the rise, which, let's say, they increased, 2% in your case.
Hmm.
year over year. What does that look like on the monthly payment? How much more is someone paying every year in taxes?
That just depends on the property value. Let's say in my case, I used to pay a couple of years ago about, I don't remember, about 2000 per every 6 months.
Okay.
Now it's gone up to almost close to 4,000 in the last 5 or 6 years. It has doubled in the last 5 or 6 years, but
Yeah.
our property value assessment has gone up too.
Yes.
But it's way less than my property value is this much, but my
Mhm.
assessed value is this much. So I'm not
Correct.
complaining.
You're not, yeah. So there's a bigger gap, but at the
Right.
same time, you are paying more monthly payment every month.
Exactly. Yes, it's
Um,
definitely gone up. Correct.
yeah.
Yeah.
So
Mhm.
do you think that people are having a hard time keeping up with that, or is that not as much in California and it's maybe more, Texas, Florida having more of those issues?
I think when it comes to property taxes, we don't hear a lot of complaints on property taxes because
Mhm.
it's 1 or 2%, maybe 2.5 max
Gotcha.
throughout California, especially Orange County, because I'm from Orange County.
Yeah.
But on the other hand, they do complain about other expenses. For example,
Yes.
gas. At
Yeah.
peak time, our gas, the premium gas, was at $7 per gallon, highest in the nation.
Hmm.
We pay almost 30-40% more per gallon of gas than any other state.
Yeah.
Our utilities are high. Our these things are high. Our taxes are high. So we save on property taxes, but we pay through other channels. In
Yeah.
your case, Texas, for example, you save on
We save on gas
state
for sure.
taxes, right? So either way you look at it, we're gonna
For
end up paying. At the end of the day, we're gonna pay higher.
You're going to pay more. Yeah,
Yeah,
and that's true because everything has gone up, not
right.
just property taxes. And that kind of leads me to our next article that I'm going to share a little bit. Some other things that have gone up that are also preventing people from maybe even purchasing a home. Well, hang on, not that one. Sorry, not that one. Let's see, not that one. Here it is. Is insurance. Let me see if I can. And we're going to specifically hone in on Florida because that's where it's the worst.
Mm-hmm.
Let's see, share this tab instead. All right. So, insurance crisis in Florida across the nation gets national spotlight. Miami, a rare national spotlight on the top concerns on the minds of Floridians. On Wednesday, the United States Senate Budget Committee debated the cause of the insurance crisis plaguing homeowners around the country. Democrats identified climate change as the ultimate driving. Oh, yeah, right. While Republicans pointed to high government spending and inflation, I would say it's probably the latter versus the former. But I mean, I guess in their defense, if you are in a state that is more prone to hurricanes, you're going to
Mm-hmm.
have a higher, or if you live along the Gulf, I can't say that, the Gulf Coast, you are going to see higher insurance premiums because that area is hit more with natural disasters. As Florida faces an increased threat of hurricanes, heat waves, and flooding, national insurers have dropped plans or raised prices in disaster prone areas, which is exactly what I just talked about.
Mm-hmm.
Would you say in California, because I know most of your disaster prone areas or the disaster prone, most of your national disasters are caused forest fires and earthquakes. Would you say that
Correct.
that's pretty
Correct.
accurate in your part
Yes,
of the country?
yes, absolutely right. Most of our disasters are wildfires, and they're huge wildfires. In fact, there's a fire going on right now, the Park fire in California, Northern California, and it's I think it's the fifth largest in years.
Hmm.
And you asked me earlier what has happened to the insurance in California.
Yeah.
It has skyrocketed
Mm.
overall. People are getting double, triple the policies. We've seen policies as high as 5 times, and
Wow.
we've seen a lot of policies drop from the current, like 6 7 months ago. California was the first state where AAA and State Farm and Farmers, I believe it was Allstate, not AAA, they dropped writing any new policies for homeowners.
Mm.
The current, like I'm with State Farm for the last 25 years, and I'm just waiting on, technically not waiting to see my insurance bill come up with the rise. But
Mm.
yes, we have seen drastic insurance cost, drastic property tax increase, because if I bought my house for $400,000 as an example, and I sell it after 7 years for, let's say, $1 million,
Mhm.
me as an owner, I was paying 3,000 a year in property taxes. The
Okay.
new owner at $1 million is going to pay $13,000 a year in property
Oof.
tax,
Yeah, that's
plus
true.
the extra insurance. So the taxes and insurance alone has cut off a lot of home buyers' dream of buying, because
Mm,
that throws them off.
yeah. No,
And the lenders are looking into that. They do look into the property taxes and insurance coming up. So when they do
mhm.
your qualification, they do take that into factor.
Yes. And I've even had some lenders try to insure me for a little bit less than what I want. And then after closing, get the bigger plan, because sometimes people's debt to income ratios can be messed up
Exactly.
as a
Right.
result.
No, it's a
Um,
big impact. Look at, you mentioned
mhm.
Florida. Look at Florida. It's there's a lot of inventory. I'm hearing 30-40% more inventory, especially condos. And the big
Yes.
culprit is HOA, and HOA went up because of insurance. So it's a chain
Right.
reaction. Right.
Yeah, it was a big chain reaction there. And
Right.
even more so because of, the predicted hurricanes, and also just providers, like you said, dropping, not covering certain areas, and or just leaving the state completely. Because we've even in Texas, we've had insurance companies just leave the state completely, meaning
Mhm.
there's less competition. So there's more opportunity for those insurance companies to drive the prices up even further,
Right.
than what they probably should be. Although I will say that here in North Texas, the biggest culprit that we see for claims is going to be hail, because
Mm.
we are in the part of Tornado Alley, and so as a result, a lot of the claims would be like for hail on your roof, roof replacements, um, hail on your vehicles as well, wind damage, kind of hit or miss. Tornadoes, even though they are here, I feel like it's very rare to see it's very rare for you to be in the path of one, or the
Mhm.
path of that damage, because it's such a little, just a small little line, compared to a
Right.
hurricane has a larger impact on that area,
Okay.
not only with winds, but they've also got hail and flooding and spin-off tornadoes to be concerned with, in those particular instances with those larger storms. But I will say, though, that the state with the highest insurance premiums, and this was a shock to me, is
Mhm.
actually Oklahoma. And the reason for that is the wind and the hail damage that they see quite a bit,
Okay.
just north of where I am. So
Yeah.
I think they actually have to have extra tornado coverage in that specific state as a result, of what they're paying. I don't think they necessarily have to have flood insurance, although, if you live by a river or a creek, and
Mhm.
you're in a partial floodplain, you could be required to shell out some more money for some of that, depending on your lender. But I want to kind of share this article again. Let's see. Here we go. So these are mainly disaster prone areas were impacted the most, but I would say that, like you said, Mike, we're probably seeing an increase in insurance cost all over the US. Probably most people, double what they paid for maybe 2 years ago, right?
Yeah, it's increasing, if different increase rates in different areas, but overall
Right.
they're going up very high compared to the last few years. This dramatic increase in insurance costs, and I think it'll keep rising. We have fires going on right now, and I'm sure last few weeks, uh, Texas, when you talk about Houston, we see it in news all the time, big
Hmm.
flooding, and I'm sure
Yes.
that has a big impact on the overall Texas insurance companies. So
I think it's more regional, and because FEMA is the one that's going to rate an area based off of, how what they're going to do. But I will say in Houston, what I have heard in Houston is that they constantly are changing if you're in a floodplain or not, because of how close they are to the Gulf of
okay.
Mexico. Um, so one year you could be, let's say you purchase your house in Houston, um, and you decide that, oh, it's good, my insurance is great. And then all of a sudden, like, they rezone the FEMA map, right? For,
Hmm.
floodplain. And now all of a sudden you're required flood insurance as well.
Yeah.
So a lot of that is happening. Those maps do get, I think, shifted around a lot more in the
Hmm.
Houston area than
Right.
along the Gulf Coast, which does make sense. But at the same time, if you're not anticipating that cost, or if you feel like you're far enough away
Hmm.
from most of that, yeah, I
Yeah.
think some of it might
Yeah.
be just them
It,
trying.
it is affecting purchasing everywhere, because it is an extra expense. It's $200 extra a month or 400 a month. That puts a damper on your payments. So
Yeah,
it does
absolutely.
have a definite impact on the purchasing.
For sure. And like you said, if someone's paying, for $1 million property, that policy is going to be a lot more expensive than what you had previously paid for it. So that's a
Exactly.
really good point as well.
Right. Yeah.
All right. So the other thing that I wanted to kind of hone in on, that another like red flag that I'm seeing in kind of the housing market right now are some of the banks that they flagged. So remember when we had a little bit of a crisis about some of those banks in California that were starting to see like, problems and issues.
Right.
Well, it's back, but maybe not in the same places. And so let me kind of share this one. Where to go? Present. There it goes. This one. And this is as a result, just strictly because of high interest rates. They've identified 63 problem banks and 517 billion in unrealized losses, FDIC says. So more than a year after the downfall of the Silicon Valley Bank,
Hmm.
higher interest rates are putting pressure on the U.S. banking system yet again, right? According to the Federal Deposit Insurance Corporation's first quarter report, the U.S. banking system is sitting on a collective 517 billion in unrealized losses and has 63 problem banks. These losses have been sparked primarily by a surge in interest rates over the past 2 years, which have driven down the price of fixed income securities held by banks. Unrealized losses held by banks increased by 39 billion in the first quarter relative to the fourth quarter of 2023. Higher unrealized losses on residential mortgage-backed securities. This is also really concerning because it's directly related to mortgages, resulting from higher mortgage rates in the first quarter, drove the overall increase. Mortgage rates have been on the rise since the start of the year, with the 30-year fixed mortgage rate rising from about 6.6% in early January to just over 7% today. And that's as of, when was this article written? June. Okay.
Hmm.
So June, right around 7%, according to data from Freddie Mac. This is the ninth straight quarter of unusually high unrealized losses since the Federal Reserve began to raise interest rates in the first quarter of 2022. From 2008 through 2021, the U.S. banking system's unrealized losses and gains on investment securities ranged from as much as 75 billion in losses and just over 150 billion in gains. So it looks like there's more gains than losses.
Hmm.
Meanwhile, the 63 problem banks in the first quarter represent an increase of the 11 banks from the fourth quarter of last year. The FDIC categorizes problem banks as banks having the CAMELS, CAMELS composite rating of 4 or 5.
Hmm.
Okay. So it looks like, let's see, total assessed held by the 63 problem banks in the first quarter was 82 billion, according to the FDIC, suggesting that most of the problem banks are smaller in size. So that's good news that they're smaller in size, but still. The number one problem banks represent 1.4 of total banks, which is within the normal range of for non-crisis periods of 1 to 2% of all banks. So we're edging really close to that, because if we're going from 1 to 2% and we're in 1.4
Yeah.
as far as the banks are concerned, that's not a good place to be. What are
Yeah,
your
it's a
thoughts
scary
on these?
number. Yeah, I mean, it's almost there. I mean, yeah,
Yeah.
yeah.
So we're almost there with some of those banks. The good news is they're smaller, but still, what do you think, from what did you get out of that article as far as what's causing the problems for some of these banks?
Well, we don't get to see a lot of reports and things about what's happening behind the scenes because obviously we're not financial analysts or we don't look at
Right.
these numbers on a daily basis. But those numbers are scary. We have heard when the Silicon Valley Bank in California, when it hit really hard and it took back the banking system down for in a couple of months.
Mm.
But things brew behind our backs or behind the scenes, and there's a lot of things brewing. We mentioned property taxes is brewing, insurance is brewing, the prices are going up. Then we
Mm-hmm.
have these issues within the banking system. No
Mm-hmm.
wonder the mortgage rates are not coming down. I mean, I don't know how it all works, but I understand that the banks borrow from each other's banks and they charge each other interest rate because you have to have a reserve every day
Yep.
based on your deposits. So all that things happening behind the scenes affects the basic computer, which is a consumer, which is us. So it
Mm-hmm.
is affecting us. I hope that there's talk in the town that the mortgage rates will come down in September. I mean, everybody's saying that. And by the reduction of mortgage rates, maybe the bank will be a little bit on ease, and that the
Yeah.
1.4 number that you showed,
At
hopefully will drop
1.4,
down
we
to
go
one or
down.
less.
Mm-hmm.
So, we'll just have to wait and see. And let's keeping my fingers crossed for the mortgage rates drop for the consumers and for the banks in this case.
Yeah, and I think some of that is probably due to, I mean, I feel like, and I wish I had the charts, but for whatever Statistica is not allowing me to share the screen, but I believe we've had a little bit of an uptick in foreclosures, which
Mhm.
has kind
Oh,
of led to some of the losses for some of these banks, or just people not being able to keep up with the insurance, not being able to keep up with the property
mhm.
taxes. I think as people's monthly, because people, I mean, in reality, people want that fixed. In reality, it should be not fixed, but what am I trying to say? It shouldn't be a drastic increase from one year to the next, right? So let's
Mhm.
say one year you're paying, $2,000 into property taxes, and the next year you're paying $4,000 in property taxes. That extra increase, that extra, money that they're having to put towards property taxes is now no longer money that they can use for an emergency, is now no longer
Right.
money that they can use for savings. That is all being eaten up in other places because everything else has just gotten so much more
Mhm.
expensive. Not only has everyone's cost of living gone up, but we kind of, it's not supposed to be like this, right? It's not
No.
supposed to jump, up and down and left and right, which is why I think we see a lot more people renting right now or choosing to rent, because
Mhm.
that, at least, you're not going to see, I mean, you will see an increase in your rent every year, but it's not going to be, I feel like, as drastic as some of the homeowners have
Right.
faced over the last 2 to 3 years, with some of those increases in insurance or property taxes. So we've got the increases in insurance, we've got property taxes, we've got, banks that are kind of teetering as unstable, or just
Right.
more of those mortgage-backed securities kind of flailing a little bit.
Yeah.
So the other red flag that I've kind of seen that have start to kind of creep in, and you can kind of really chime in on this because you have a little bit more experience than I do
Mhm.
with this, since you were around during the '08
Okay.
crisis, and I
Mhm.
was not around. I mean, I was
Okay.
around, but I wasn't in real estate at that time. I
Okay.
was still teaching kids and I was raising my family, so that's
Right.
more or less what I was doing. But can you see the article?
No, not yet.
Let me see if I can put it back in the stream. Sorry about that. There we go. All right. The return of zero down mortgages. They're going to make a comeback. What do
I heard
you?
about that. Yes, I've been seeing some of those lenders talk about it, lenders pushing it. When I say lender, not the individual agent lenders, but the company
Mhm,
lenders, like, whoever. Yeah, I've seen those. We've seen a lot of 3-to-1, 7-to-1 arm loans coming back.
mm,
And to me, that's a red flag in the
yeah.
long term. Going back to, you asked me what happened in 2008. And in
Mhm,
fact, I did a video about 2-3 weeks ago and I talked about it. One of the reasons of course, there was a lot of reasons, but one of the main reasons a lot of people lost their homes is because banks were giving loans. There was a joke here. If you had a driver's license, you got a loan.
mm,
And I'll give you a quick example how this toxic loan worked. So they gave a 1 in 5 mortgage rate, adjustable rate, right? So the first
mhm,
year it's 1%, and then every year it goes up to 2%, 3%, 4%.
mhm,
But what the lenders did is they qualified you at 1%.
mm,
So if you were making, and I've sold homes to 5 brothers, I remember distinctly. I had a
mm,
listing sold through a buyer's agent, brought a buyer. There were
mhm,
5 brothers, sisters. They were making minimum wage. At that
okay.
time, it was like $15, whatever it was, or they were making that much. And they qualified for a loan based on 1%. What happened
Mm,
was I kept in touch with those buyers because that's what I do. And then
yeah.
I found out 2 years later, the house was in foreclosure because what happened was that $1,000 a month payment jumped to
Mhm,
$3,000 a month and they could not afford it.
yeah.
And the banks got their money because banks, what they do is when they have a loan, they take the loan and then they sell it.
Yeah.
So, and of course the Fannie Mae, Freddie Macs, all those guys buys them and all that.
Mhm,
So that's just one example. And now when it comes to 0% down, my feeling is if you don't have any down payment, don't buy it.
yeah.
If you don't have a car, if you don't have a down payment for a car, don't buy it unless you have to. And house is something you can wait. And when you're trying to get a 1% arm that you can qualify at 1%, even though next month, next year is going to go to 3%, your payment's going to jump,
Mhm,
payments aren't going to go high. So this is a sign that maybe in 2 or 3 or 4 years, we may see the effect, because this is one of the reasons that happened in 2002, 3, 4, 5, 6, led to the 2000, 2007, 2007, 2008, 9 recession.
mhm,
And everybody refinanced with those loans, pulled the money out, bought Mercedes, bought vacation homes, went to Hawaii. Next thing you know, the credit cards were high. They had no equity in the house. They lost a
mhm,
job. And they lost the house.
yeah.
So,
No, I think so. With the 0% loan product that this one is talking about, it's a little bit different. It kind of
right,
reminds me of like a piggyback um, loan.
right.
As to let me kind of see what they've got here. So we've got the massive roadblock is being removed by a 0% down mortgage program launched 2 weeks ago by one of the nation's largest mortgage lenders. However, the new program offered by United Wholesale Mortgage is making some experts nervous, just like it's making you nervous, about how these loans could backfire on homeowners, especially if home prices stop going to the moon. And for sure, for some, it's bringing back bad memories of the subprime mortgage meltdown that fueled the 2008 financial crisis. Let's see. Oh, that's sports. Sorry.
Mhm,
Instead of the program, Instead the program will allow buyers to pay 97% of the home's value with the first mortgage, and then
mhm.
provide the remaining 3% up to $15,000 in the form of a second mortgage. The second mortgage won't accrue interest, but it will need to be paid back in full as a balloon payment when the home is sold, the mortgage is paid off, or if the owner refinances. So this balloon payment, it probably has me the most worried, because to me, you know, all of a sudden that $15,000 can be due in full, and you're just due. I don't know how the balloon is set up, but at a certain point, you're going to have to pay all of it off. Um, I mean, this could work in the sense that if you have someone that that is, let's just say, they're about to be receive a whole lot of money, but they don't have a whole lot of money yet, like from an inheritance, or they're going to be receiving some of that money from, um, a parent down the road or whatever it is,
Hmm.
I can kind of see a little bit of this, you know, being a benefit. I did have my sister-in-law used what was called a piggyback loan, kind of a similar thing, to where they didn't have a down payment, but they used another loan to cover the down payment. But I don't believe it was a balloon payment like
Okay.
this specific product is. Um, so I'm
It
not
sounded
sure
like an
about
FHA loan.
that.
FHA loan, the FHA loans have that too, where you can get the
Gotcha.
97% and then you piggyback the. So it could be FHA because I know they have a program like that.
Yeah.
And there's other banks that do that. So, my rule of thumb is never buy a house at 100% loan amount. That's
Yeah.
my personal rule of thumb, and I don't advise this to
Even
my buyers.
veterans,
Beg your pardon?
even for veterans.
Veterans is a different situation,
Okay.
right? Those are exceptions, right?
Yeah.
But I'm talking in general. If I'm want to buy a house, then it's a different situation because you're borrowing already 97% of the house. Now you
Mhm.
don't have the 3.5% or the 3% or 5%. Now you're
Yeah.
borrowing that.
Yeah.
Veterans
I
is a
think
different situation. They're on fixed income, et cetera, whatever. That's a different category.
yeah, but then you have the USDA product too that's also 0% down. Um,
Correct. Right.
but I think the big takeaway, kind of what you're really getting at, is that not only do you need to make sure that you can afford the monthly payment every month on whatever mortgage you're getting, you need to understand all the rules to the mortgage that you're getting. So if it has a balloon payment, you need to understand
Yeah.
exactly what the rules are. If it's an ARM, you need to understand exactly what the rules are, and kind of vet out all the different scenarios that could happen.
Yep.
If values go up, what's going to happen. If values go down, what's going to happen. Because usually, a lot of times, people don't realize when values go down, you can't refinance out of that higher rate, with an ARM or with a product like that, right? So that's where you have to be a little bit more cautious and
Mhm.
careful whenever you're talking to that. I think the other thing too is making sure you have an emergency fund when you go into it as well. You can't. You are going to have some costs and expenses that things will come up for maintenance that you may not realize. Right.
Mhm.
A good
Yeah.
rule of thumb is probably like 1 to 2% of the value of the house is what you should be kind of setting aside for any repairs, any maintenance
Right.
and stuff for your
Right.
property. So making sure you have that emergency fund, you've got maintenance covered. If
Yep.
all those things are covered and you feel financially confident that you can go through with that 0% down program, whatever it might be, and you understand everything, then I think it would be okay. But someone that's just going in willy nilly just to, get something, just because their friend has a house down the street, it's not a good enough reason
Exactly.
for
Right.
that.
Yeah. Yeah. You have to be very careful. I would say take advice from your accountant, CPA, your
Yep.
good friends, your good family. Make sure if something happens, if the market goes down 3% and you have 100% loan, you cannot refinance because now you don't have the equity. Or let's
Yes.
say you got transferred and you have to move in 2 years and you have to sell. But if you sell it and the prices were the same, how are you going to pay that balloon payment? You don't have the money.
Or you're
What?
going to take a loss. You're going to take more of a loss in those
Well, you don't have
situations.
any cash, and
Yeah.
you have to pay the balloon payment. You're going to have closing costs, commissions, escrow, title, moving cost. You may not be able to take that job or that transfer, and you're stuck over there. So,
Hmm.
it's something I would be very cautious if I had a buyer.
Yeah.
Unless they had a good reason to pay the 0% down, I would not encourage it personally.
Right.
Yeah.
No. No, I
But there's
agree.
exceptions. There is exceptions, but in general, I would
Right.
I would it's a no-no for me.
Hmm. For sure. All right. So something else that I wanted to kind of hone in on, there are some cities that we are seeing some relief in home prices, which to me is a good sign. We're not seeing necessarily what I would consider any type of crash. And you can correct me if I'm wrong, because I haven't lived through the '08s.
Okay.
So, but we are seeing some decreases in property values in some of these cities. And I'm going to
Hmm.
kind of share this tab instead. Let's see here. Oh, what wrong? I got you lost. There you are.
Okay.
All right. So we've got 20 cities where home prices are falling most in the United States. So this article is from Yahoo Finance. Let's see. Housing prices amidst expected rebound. As reported by the National Association of Realtors, home prices increased more than 85% of U.S. metros during the fourth quarter of 2023. That's a lot.
Mm-hmm.
Some of the United States metros with the largest year-over-year median price increases include Dayton, Trenton, Newark, and Johnson City. You can also take a look at other U.S. metros with the highest median list prices. Simultaneously, the national median single family existing home price experienced a growth of 3.5% as compared to 2022. With respect to home sales, the highest single family existing home sales were recorded in the South. The South witnessed a 3.2 year-over-year growth in home prices. Home prices increased by 7.3% in the Northeast and 4.7% in the Midwest. The West recorded a growth of 4.2%.
Mm-hmm.
So, kind of before we get to the article or the rest of the article and reveal what some of these cities are, what would you say? Have you been seeing? What have you been seeing, I guess, in Anaheim in Southern California as far
Well,
as
I
price?
just coincidentally, I just heard on the news today as I was coming to this to my house again that the California prices year over year increased by, I believe it was 8%
As of this last month?
year over year.
So we're
From
in
last year to this year,
July.
the prices went up by 8% on average in California. That's what I heard. But to
Wow.
answer your question, in Anaheim Hills, in Orange County, and surrounding areas, because I showed homes in Riverside, which is about 45 minutes away. I showed homes in Cerritos, which is 30 minutes away.
Mhm.
I am not seeing any price decreases at all. I'm
Mm,
actually seeing price increases, but a very
mm.
gradual. It's not like, hey, this sold for 1 million and the neighbor wants 1.1. No, it's not happening. If a
Okay.
house sold for 1 million, and if I'm putting my house on the market, I may get 20, 30, 40,000 more. But definitely we are seeing an increase in prices, not a decrease in prices. But
Wow.
one thing we did notice is that it's taking longer to sell a home.
Mm.
And when I say longer, in last year, if it took 10, 15, 20 days in Orange County to sell a house, it may be taking 45 days, which is
Okay.
way below the normal, which is around 90 days. So I don't see a decrease yet overall,
Right. Okay. So
at least
here
in
in
Southern
Dallas,
California. Yeah.
we are seeing things things in the spring we're kind of popping a little bit. We saw multiple offers, and occasionally we'll see a house that will pop up, we'll get multiple offers on, but I would say a majority of homes are getting about 95% of the list price. So if you put your house on the market for $100,000, you're only seeing 95,000 of that,
Hmm.
so we are seeing a dip in prices in Dallas Fort Worth. There's more dips in areas that went up higher. Like our values went up about, and it's in parts, especially parts of North Dallas. So we're looking north of Dallas. Most of those property values went up about 100 grand since 2021.
Wow.
So
Okay.
we are, and that's another reason why the state actually, as far as property taxes go, they're assessing us on $100,000 less of what your assessed value is for your property taxes. Before it was only like 40%
Hmm.
less. So they've
Right.
actually increased, how much they're taking off the top, essentially, as far as how much they're
Right.
trying to tax you from your homestead. But I would say that the areas that saw the most increase are going to see the biggest decrease in the months to come, and we are headed into the fall, and so
Right.
we are going to be seeing longer days on market. I've
Right.
got a new construction property right now that we've been sitting, but at the same time, it's hard for me to market it because we're trying to get power on and professional photos. I've got photos that I've taken that I've doctored as much
Right.
as I can,
Yeah. Yeah.
with what I've got. But without any power, it's been a little bit difficult to
Mhm.
market that specific one. But I am seeing more people trying to do more. I've been seeing more open houses. more marketing just in general for a lot of the
Right.
houses in the area. So and they are sitting longer on the market. I would say on average, maybe like you said, 30 to 45 days is kind of what
Hmm.
we're seeing here in Dallas Fort Worth. Obviously, that's longer if it's a higher price point, and the
Okay.
lower price points are going a little bit quicker, but still, there's just not as many buyers in this that are looking to make a purchase right now in this
Right.
time. However, I will say it is a good time. I am seeing some investors that are going to start creeping in here in a little bit, that had just sold some property in some other areas, and they're going to reinvest here in Dallas. So I've been seeing more investors kind of looking for those deals
Hmm.
lately as well in our
Yeah.
market.
Right.
What about
So
you?
one thing I want to clarify to answer your question earlier, what's happening
Oh
with the
yeah.
prices? There's two things I'm noticing. One, obviously, is taking longer to sell. The other thing is that the prices are increasing. But on the other hand, we are seeing a lot of price decreases.
Mm.
But that's because the sellers thought the market is going to go up and up and up. So they are listing it high. So
Yes.
they're dropping the list price, but the sales price are still competitive or higher than the last sale. So they're not getting 100% of the list price, because if my house is worth $500,000 and I tell you, hey, Rebecca, my agent, I want 525, and you list it, and then I sell for 515, doesn't mean my price dropped. My list
Gotcha.
price, but my price is higher, 15,000 more than my neighbor. So there's a
Hmm.
distinction that the viewers can understand, that there is a, yes, price drops from the list price, taking longer to sell, but the actual sales price comparing to last year to this year, at least in Southern California, it has not dropped.
Hmm. Yeah, we're seeing a little bit of people overpricing homes. That is a big factor as well.
Right.
But I'm advising people to take the middle ground. So, like whatever range I recommend, we'll go for the middle, or
Hmm.
go slightly under that, just to kind of
Right.
show that we're setting a fair price as much as we can in
Right.
this market. All right, so let's see, add to the stage. Here we go. Let's see what else is kind of going on. All right, so housing market rebounds, home builders providing affordable real estate options. What about home builders? Let's talk a little bit about home builders. Let's see, we've got LGI Homes. They're here in Texas. Um, Lennar, they're here in Texas. KB Homes is in Texas. Um, let's see. Yeah, because KB Homes mainly builds townhouses. Let's see. All right. So what are you seeing as far as builders, and what are they offering clients? Do you see a lot of new construction in your area?
Yeah, we do have a lot of, not as much in Orange County, but just 40, 30 miles away in the Riverside County, there's a lot of new construction. And I've actually sold in the last maybe last 7, 8 months, I've sold 3 new construction.
Mm,
And all of them gave us in the sense, the buyers, a lot of incentives. One house
mhm.
I sold for $900,000, and they gave $42,000 in incentives,
Yeah.
which we can use towards closing costs or repairs and things like that.
Yeah.
So a lot of the buyers are buying new home construction.
Mhm.
And also, as a realtor, I'm getting a lot of emails, a lot of calls from builders saying, hey, we'll pay you 3%. Before, they didn't pay you anything. Now they're paying you 3%, or hey, come over, we'll give you
4
donuts, whatever.
4%, or
4%,
$3,000 bonus.
being your buyer. I mean, before, when we used to call, I have a buyer, said, no, we're not
Mhm.
giving any commission. So that's an indication that, yes, new home builders are not struggling, but they're having a hard time selling, because when they give you these incentives, it tells you there's a slowdown.
Yeah, yeah. There's definitely been some more phone calls to me, or emails, or promotions, or what's the new thing for the month, type
Right.
type things, where they're offering, 40 and $50,000 to put towards whatever, right?
And the
Especially a
biggest
lot
thing
of.
is, in fact, one of the 2 homes that I sold, there were 2 single gals who bought it.
Mhm.
If we use their lender, not only did they give you incentives, but if the market, in fact, when the rates were 7%, my
Mhm.
client, if you use the lenders, I mean the builder's
Yes, builder's
lender,
lender. Mhm.
they gave a point off the interest rate.
Wow.
So that was a big thing. And that's why both the clients use their lender, because they, instead of paying 7% as an example, they
Mm.
only paid 6%. So that's huge. And there's a reason why they do that. They want to move the inventory. So
Yeah.
it
No,
has
yeah,
slowed down slightly.
I
Yeah.
know that their inventory is slowing, the rate of that is slowing down. So they are offering quite a bit more incentive wise. Yeah, lots of them trying to get agents in to help, and
Right.
even those that are relocating. But I will caution people, if they are looking at new construction, make sure you have a plan for, because here in Texas we have extra taxes you'll pay sometimes, called mud or PID taxes. That's in addition to your property taxes,
Okay.
that you pay every year to offset the cost of the utilities that were put into the community. So instead of the builder paying for it, now every resident is paying their portion of it as they purchase a home, instead of it being built into the cost essentially.
Right. We have the same thing. We have what we call Melrose tax, or the
Mm,
assessments, because they pay for the library and the school and the water system and the parks, which the city requires them to build. And they
right.
throw that cost on the buyers, which they pay monthly. So
Mm-hmm,
your
mm-hmm.
HOA goes up and your assessment goes up. So
Yes.
everything goes up. Right.
Yeah. So you have to be really cautious of that. And I will say too, have a plan for how long you're going to stay in the property, because if you're like, okay, we're going to be here for 5 to 10 years, you're pretty good. But you have to understand, if you try to resell your house in 3 years and the builder is still building homes in that neighborhood, it's going to be a lot harder for you to sell your property, and you're going to get a lot less money for that specific property. Even if you have the bells and the whistles and the upgrades, people are going to be like, well, I can get new just down the street for the same price.
Right.
So that's something that people don't take into consideration, I think, when they relocate to a new area and they are looking at new construction. So I just kind of wanted to
Mhm.
throw that in
Yeah.
there as
Yeah.
well. So let's look at these states. I know we're kind of coming up on our hour. So
Okay.
let's kind of reveal some of these states and these areas. So this is kind of the methodology that they used. This is their list of 25 cities where, let me see if I can, am I sharing it? I'm not sharing it. Okay, here we go. We got 25 cities where home prices are falling the most in the United States.
Hmm.
We source data from the latest quarterly report by the National Association of Realtors. We shortlisted the cities based on the year-over-year decline in median prices of single-family homes. So we're not talking about townhomes or condos.
Hmm.
These cities have been ranked in ascending order of the year-over-year decline in their median home prices as of the fourth quarter of 2023. So these are 20 cities where home prices are falling. So we've got number 20, Eugene, Oregon. Let's see, home prices are falling in Eugene, which is a city situated in Oregon's Lane County. Since the fourth quarter of 2022, the median home price in Eugene has decreased by 2% year over year. As of 2023's fourth quarter, the city boasts a median home price of $450,400. And I can
Hmm.
kind of see, so this price is relatively low for Oregon. Um, so someone who's relocating from California would see that price and be like, that's a deal. And if Eugene is a cute little, town in Oregon, then they may say, well, let me relocate here. And then what happens is they regret it,
Hmm.
right?
Yeah.
So I can see where, because, yeah, and we'll get to some other states too, of where some of
Right.
the biggest regrets are going to be. So Memphis, Tennessee, another one. Let's see, their median home price is at 248,400. That's a great price. So if you notice, so we've got a change in year over year. They're decreased by negative 2.2%. Very affordable price, 248,400 for a single family home. I wonder if some of this was because what we got Memphis. What's the other famous? Nashville.
Nashville.
Is the
Yeah.
other is really expensive compared to Memphis. So I wonder
Right.
if people were, going to Memphis, and they regret it, and then now all of a sudden those prices kind of drop, or they got too high for the residents that were living in that specific area, because I don't doesn't tell me what the prices were 2 years ago, 3 years ago.
Right.
I
Right.
wonder if it was closer to 200,000. And
Yeah.
so they may have priced out people that have lived in that area too. We got
Hmm.
Little Rock, Arkansas that made the list at number 18. Doesn't say what their median home price was. Crestview, Florida, number 17. That's very affordable for Florida, 394,
Right. Oh
600.
yeah. Hmm.
And I wonder what part of Florida that's at, if that's on like the Gulf side or the Atlantic side.
Yeah, I have no idea. Yeah.
I know. So they went down negative 2.3. Owensboro, Kentucky.
Hmm.
Situated on the Davies County. Let's see. I know, and Kentucky's relatively affordable as well.
Hmm.
So, and then Austin, which is apparently California's twin sister. No.
Yeah. 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 High
I mean,
tech city is becoming a high tech city.
well, not only that, but people, the climate, the geography in that area reminds, you know, people of Southern California a lot.
Right. Right.
So a lot of people are
Austin
enjoying.
has been going down for a couple of years now. I know Austin
Yes.
has been one of the earliest
Went up, 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 up,
cities.
up, up, and then
Yep.
it went.
Yep. It went down.
So it's still going down, which is what I mean. New construction has also kind of helped bring some of those prices down too, because we've got builders that are building outside of Austin that are, offering better deals, better pricing, and so
Right.
it's driving
Yeah.
a lot of people
Suburbs.
out.
Yeah.
Mhm.
Suburbs of Austin. Correct. Yeah. That's part of the
Mhm.
reason. Yeah.
Number 14, we've got Myrtle Beach. I don't know a whole lot
Hmm.
about Myrtle Beach, but I know it's South. The Carolinas are usually pretty affordable.
Yeah.
I think their median, when I was looking at Raleigh and Charlotte, North Carolina, which is above this one, I think their median home price was closer to like the threes around
Hmm.
there. So I wouldn't be surprised if Myrtle Beach is around the threes in
Yeah.
price, 300,000. Um, so they saw a decrease, and also too, you have to look at each city's economy. Myrtle Beach is a beach. We got a beach town. Its economy is based off of tourism,
Yeah. A lot
probably
of
quite a
golf
bit.
there. A lot of golf.
A
Tons
lot
of
of
golf
golf.
there. Yeah.
So I can see, if the tourism market has been hit a little bit,
Hmm.
it can also affect home
Yeah.
prices and not as many people moving to those areas or buying. Maybe it was a vacation property that they
Right.
bought in some of these
Yeah.
spots that
Possible. Yeah. Yeah.
that could have possibly they regretted or can no longer afford.
Right.
Chico, where's that?
Chico is in California, Northern California. Well, there's a
Northern.
fire going on there right now too. I believe near.
Oh,
Yeah.
okay.
Yeah.
So
Chico is up close. Yeah.
is that on the so that's the colder side. So you're closer to Oregon. Is that close to how close is that to Sacramento?
It's above Sacramento.
Right. But how about how far away
If I had to
would you
guess, I would say at least 2 or 3 hours drive. If I had to guess,
Okay,
you know,
yeah. But
uh,
just further north,
further
further
north. Yeah.
north than Sacramento. Okay. Is there a lot of people that live up in that part of the state? Does it get more rugged as far as mountains and forests
Yeah,
and
there's a
stuff?
lot of forest over there compared to Central California, Southern
Mhm.
California, even Bay Area, Sacramento. It's
Okay.
more rural, but a lot of population over there too. Chico and all those areas, Santa Rosa, Sonoma County further up. Yeah.
And more affordable, it looks like as well, the affordability.
Well, the prices are definitely cheaper than
Mhm.
Bay Area or Southern California.
Of
Much
course,
cheaper.
yeah,
Yeah, yeah, way
yeah.
cheaper. Yeah.
But I wonder where those prices were a year or two ago, because that makes me wonder because they've gone
But
down
overall,
quite a
they're
bit.
going up. Yeah, I'm not sure. Does it say here, Chico? It's 407.
Yeah, 407. They're down 3% year over year. I
Yeah,
wonder if that's been a downward trend in that specific area. I wonder if, like you said, forest fires could be playing a role as well
yeah,
in that area where people relocated and then they kind of like, oh,
yeah.
we didn't realize that forest fires were such a big deal up here.
Yeah, could
Yeah,
be. Yeah,
yeah, it
could
could
be.
be. Or maybe their insurance, because you said the insurance can be affected by that as
Yeah,
well. So that could be as well. Cape Coral, Florida. Now that I know is on the Gulf side. It's just north of, gosh, what was that town that I researched recently? But it's on the Gulf side of
right.
Florida.
It's a good town with a lot of nice homes over there. It's a nice area. I
Mhm.
know an agent there that works that Cape Coral area. It's a nice
Yeah,
area. Yeah.
40,000. That's a good price. I bet. So I've got, I think for sure insurance is bringing down. So far we've had two Florida cities, and
Hmm.
I want to say we're going to keep going into Florida. There's Florida again. Beaumont, which is like Louisiana, Texas border, Gulf of Mexico area.
Okay.
That's where Beaumont is. Very affordable. We're
Hmm.
under 200,000. Um, I would say flooding and maybe insurance has impacted that area.
Right.
Um, and I would say it's not as popular of a town. I think there's some oil rigs that are just outside of Beaumont. If correct me, audience, if I'm wrong in the comments, but I believe there's like a lot of some of the work in that area would be oil related on some of the rigs that are over there close to the Gulf.
Okay. Yeah.
Um, so with the hurricanes, with increase in insurance and flood insurance, I wonder if that has affected that area a little bit. Um, and it's a little bit more swampy because you're getting closer to Louisiana in that
Hmm.
area too. Um, yeah, it makes me wonder because even though it's gone down 3.8%, so it makes me wonder where it was a couple years ago, because if we're under 200,000, to a lot of people that's affordable.
Yeah.
Um,
Yeah.
and so I wonder what's kicking people out or making people kind of change their mind when it
Yeah.
comes to Belmont. All right, so Sarasota, Florida, we got another Floridian state or Floridian city. Sorry. Here, let's see, decrease of 3.9% during the fourth quarter of 2023. That was last, December. Um, so seeing some prices falling there. That this is probably the lead up to what's happening now in Florida. Um, and I'm sure there's more cities too that are in Florida that are seeing decreases as well as a result of, like we talked about, the
Hmm.
HOA and insurance
Right.
costs.
Right.
Elmira, New York. I don't know anything about Elmira
Yeah.
except it looks like it's really cheap.
Wow.
Um,
I should move there.
142.
142,000. That's
Yeah.
my average down payment for my buyers over here.
Wow.
Wow.
Wow, and it has gone down 4.2%. I wonder what's driving that. So
No
if
idea.
you're, watching this on the replay, let us know if you're in
Yeah.
Elmira
In the comment.
and
Yeah. I'd like to
what's
find out.
what's
Yeah.
going on there.
Yeah.
That's a big dip for an affordable area.
Hmm.
So San Antonio, Texas, we've got another Texas city down 4.3%. And San Antonio is a more affordable area. We've got 315,700 as the median home price there, which for the area, I feel like that's pretty high. Um,
Hmm.
but it just depends on what part of San Antonio you're talking about too.
Okay. Yeah.
This part of San Antonio, I think that's closer to Austin. It might be a little bit more expensive.
Okay.
Um, and then you've got other parts that are less expensive. Year over year declined 4.3%. And San Antonio is a big military town as well. When it comes to things, plus tourism. So I wonder if
Right.
tourism has affected that area with the lack of tourism, because people's budgets are tight, so they're not
Yep.
able to travel as much. New Orleans, Louisiana, down 4.6. Man, I wonder what's kind of going on in New Orleans, other than maybe flood insurance, maybe making a bigger impact in that area. They're down 4.6%. And I wonder if it's gone down even further from, end
Yeah.
of last year, because we are getting close to the end of 2024 now. And then Provo, Utah. And this is another small town. I wonder where in Utah it is in regards to like Salt Lake and some of the larger cities. But it saw a decrease of 4.8%. And we've got it sitting right around just over $500,000 for its median price for that specific area. So a lot of these small towns are being hit. That's number 6. And here we go.
Yeah.
We're gonna we still haven't made it to the top 5. Okay, top 5 cities. We got Punta Gorda. I don't know where that is. Do you know where Punta Gorda is?
What city is that? I can't read that.
Here.
Let's see. Where are
Oh,
you?
here. Share this tab instead. There we go. There you go. Can you see it now?
I'm seeing the same thing, the Provo, Utah slide so far.
I think my internet's stalling.
Hmm. That's an ad running, I think. Yeah.
Close screen. My well.
Yeah, I can hear you. We can hear you and see you, but I cannot see the slides or the.
Okay, let me remove this. I can't even remove it from the screen. This is really embarrassing.
That's okay.
We're not even going to get to see what the top 5 were. This is like anticlimactic, you know?
Yeah.
This is a real big bummer that it's not allowing me to do anything. Oh, man. Can you share your screen?
I wouldn't have the data though, so share screen. I don't know if I can do it,
I
but I
sent
don't
you.
have the. Yeah. I don't think I can share my screen from here.
Yeah, my computer is like.
Oh, there you go. Okay.
My screen.
Whoa. Okay. All right. Well, mine's back. It's snap backed. I'm going to
Okay.
get rid of this.
Okay.
Oh, I wonder if there's a virus with that website. I'm not going to touch.
Yeah. And we can just talk, so yeah. Maybe what you can do is put those in the comments so we can see the top 5 or
I
whatever.
will. Yep. I'll put them in the comments, the top 5, so everybody can see.
I'm curious
those
to find out
cities
and
and-
definitely come back and see it. Yeah.
Yeah, definitely come back and see what the. Actually, I'll put them in the description, so that'll be a little bit better.
Well, that's better. Yeah.
For people. Uh-oh.
Okay.
Yeah, I don't know what happened to you. My computer's going crazy.
Okay. I can hear you.
All right. Well, we're gonna. Oh. we're gonna go ahead and wrap this up just because we're having some computer issues. But if they want to find you, oh my gosh, what's your YouTube channel?
At Home Savvy Central. Home and then SAVVY Central.
Uh-oh. Central. Okay, I'm going to try to share this with, see if it'll allow me to share it.
Yep.
Okay, there you are. Uh-oh, no. Are you still there, Mike?
Yeah, I'm here. I can. Yeah.
Okay. All right. I thought I lost you. I thought I hit the.
No, I'm here. Yeah.
Okay. Let me see if I can get this to share. It's being really.
Yeah.
Where are you? Oh, there you are. You're way over here. Oh my gosh. This is terrible. It's like loading for me to switch tabs. So if they want to find you, they'll find you at Home Savvy Central, you said?
Right. Maybe you want to put a link or something in your
description. And I'll have
description
Mike's information.
Yeah.
Yes, I'll have it in the description as well. So if you need to reach out to Mike and you are in SoCal, in his area, he'd love to, I'm sure, help you out or guide you as to what you need to do or give you some great advice. So with that being said, we're going to see if we can leave with some music. Let me see what we got. Kind of like mellow.
And ending, right?
Yeah. Yes.
Yeah.
We thank you guys for watching and watching.
Thank you.
And we will see you next
Thank you. Thanks for inviting me, Rebecca. Thank you.